Hello, everyone, and welcome to today's webinar, Compounding FinCrime Concerns, Pros and Cons of Combining BSA and Fraud Departments, discussing how to approach BSA AML with a fraud mindset. We are excited to have you join us today. Before we jump into the content, let's roll through some quick housekeeping items. We will send out a link to the slides, resources, certificate of attendance, and webinar recording in a follow-up email, so be sure to keep an eye on your inbox. In the meantime, you can find the presentation slides and other relevant resources in the handout section of GoToWebinar Now. Additionally, we will have a few poll questions we'd love for you all to answer throughout the webinar. We utilize your responses to help tailor our content, so your involvement is greatly appreciated. If you have any questions you'd like to ask throughout the presentation, please use the question section in the GoToWebinar panel to address the speakers. If we don't have enough time to answer your question during the session, we'll be sure to follow up with you afterwards. In January 2019, Bankers Toolbox, an anti-money laundering and fraud detection software provider, SageWorks, a lending and portfolio risk platform, MST, an allowance provider, and Farron, a financial information company, all came together to become Abrigo. Abrigo's platform centralizes the institution's data, creates a digital user experience, ensures compliance, and delivers efficiency for scale and profitable growth. The legal cannabis industry is on the rise, with over $17 billion in sales in 2020 and an estimated 73% growth by 2026, giving executives the unique opportunity to drive revenue while meeting the needs of underbanked businesses in their communities. Join our upcoming session as cannabis banking experts go beyond fees and deposits to discuss the 2022 market opportunity, financial models, and case studies to demonstrate how to leverage your compliance department to generate revenue. Register now using the link in the chat. Abrigo surveyed more than 300 BSA AML and fraud professionals from both banks and credit unions to benchmark the significant issues and challenges they are currently facing. If you haven't already, download our white paper for suggestions from industry experts for managing these matters of critical importance in an ever-changing environment. Don't miss our upcoming webinar. In this session, David Tyree, United States Drug Enforcement Administration Resident Agent in Charge, will present an overview of the current trends drug trafficking organizations are using to operate in the realm of money laundering. Join us for recent case examples, which demonstrate the high value of collaboration between law enforcement and financial investigative units to disrupt and dismantle criminal networks. I hope to see you there. Today's presenters are Melissa Mantooth, Senior Risk Management Consultant at Abrigo, and Patrick Thomas, Risk Management Consultant at Abrigo. We are very excited to have them joining us today. And with that, I'll go ahead and pass the reins over to today's presenters. Take it away, Melissa and Patrick.
Good afternoon, everybody. Hopefully everyone out there is safe and doing well, especially during these trying times. For today's presentation, I'll be covering the first two sections, the advisory approach with fraud calibrations and resources for fraud. And then I'll be kicking it off to my teammate, Melissa, for the second part, which is the workflow and fraud and to cross over or not to cross over BSA and fraud lines. And with that, the advisory approach with fraud calibrations. So I'm going to start this just with some basics with our advisory approach to fraud calibrations. My first step in my approach prior to kickoff is to prepare. So when I'm preparing to start a project with a financial institution for the first time, I start creating a set of questions I want to ask the compliance staff that'll help me familiarize myself with that institution and its risks. I'll use that as a guide for research and see how many of those questions I can find answers for on my own. Then my second step, the due diligence. Doing that little bit of research to gather some basic information on the institution I'll be working with from an outside perspective. How large or small is the institution? how many branches does it have, and in what locations, who are its customers, and what products do they offer. Basically, anything that has been made available publicly that I can find out easily on my own before I have that initial call with the bank. And then the third step is to identify the unknowns. So after I've done some research, I've set myself up to be familiar with the bank before we've even had our first conversation. So now going into that initial consultation, I've answered as many of my own questions about the institution that I can, and can now focus on the unknowns of the project directly with the compliance officers and staff. And from there, I'm ready to go into my pre-calibration next steps. So now I'm at my pre-calibration. I'm kicking off the project with the bank staff. I have my set of unanswered questions, and now I'm just going to break this part of the project down into steps. Number one, my first step is to learn. So at the kickoff call, I'm going to ask the BSA officer or compliance staff to introduce me to their bank. I want them to tell me about their institution. Anything that I couldn't find out on my own or need to clarify, I want to learn here. So do I need to know, about who their customers are, or do I need to know more about who their customers are and who they do business with, the products they offer, where they do business, their fraud risk challenges and strategies. I may go deeper into geography. What high-risk jurisdictions does the financial institution conduct business in? Are they in HIFCAs or HIDTAs? Are there any inherent risks that I can identify just based on their location or locations? There's risk questions. I like to ask specific risk questions. These wouldn't be all the questions I would ask, but a few I'd want to know the answers to for the project in calibrations directly from the institution staff, such as, what is the most common fraud you're finding? I'm always going to make sure I'm looking at all fraud concerns, but I also want to spend a little extra time to focus on the common fraud risks that the institution has caught or discovered. What fraud-related losses have they identified? And have you taken any corrective actions to address them? What is the institution's fraud risk appetite? The risk appetite is a guide I may use to determine if thresholds should be set conservatively or less so, depending on where the risk should be focused. Does the bank feel like it isn't capturing enough data or too much data? What risks are not of great concern over other areas? When was the last risk assessment performed, and did it cover fraud? This, of course, is where you would identify your vulnerabilities. Not all risk assessments will cover fraud. Many of them are covering only AML or BSA risk and may not incorporate fraud. So if an assessment hasn't covered fraud, I'll need to know more about the fraud risks to the institution and what prevention measures they have or may not have, so that we can calibrate settings to capture those risks and minimize the institution's vulnerabilities. And then lastly, I'm going to study the customer information available to me. I need to know the institution's customers, any reports that reflect detailed customer activity, high-risk accounts, high-risk customers that have or have not been identified, as well as customers who may conduct regular activity that could be flagged or alerted to and would need individual exemptions to be established. So now that I've gone through those steps, I've learned about the institution, have answers to my risk questions. I've studied the customer activity reports. I'm ready to start the calibration. So starting the calibration by identifying the risk challenges. So by now, I should have identified and have a solid understanding of the risks, the institution's risk challenges, where they want to concentrate their fraud mitigation strategy and identify outliers and any trends. So then I'm going to go set those thresholds. After a thorough review of the customer transaction activity, I want to set those thresholds to capture quality alerts. If the institution is currently monitoring activity, I'm going to look at alert history to see how many alerts were generating cases in SARS. Is there a high number of alerts with a low number of created cases? Is there any duplication or overlap that can be eliminated with minor adjustments? And then from there, it's a little bit of a balancing act. As I'm making changes, I'm attempting to calculate how many alerts the new threshold setting would eliminate or add, and then setting each scenario accordingly, while making sure that the new proposed settings wouldn't miss any true outliers or expose any vulnerabilities. And then lastly, I'm going to review. I'm going to review those setting recommendations with the institution. I want to make sure that the compliance officers and staff are comfortable with the new settings. If they feel it'll capture too much activity or not enough, I'm going to need their guidance because they know what they're capable of handling, and they'll always know their customers better than I do. And then I wrap up the project. I'll invite the bank officers and compliance team to continue to communicate challenges or changes, anything that impacts risk appetite or a new fraud loss or event, things such as mergers, new customer types, any new locations they may begin to conduct business in. Each of those events would require a new calibration in the future. And that's really it. Keeping that established line of communication with the bank and developing a fraud fighting relationship, making sure we're on the same page throughout the project and the continuation afterwards. That's really the advisory approach with fraud calibrations. Then our resources for fraud. If you want to go to that next slide, there we go. So there are a lot of fraud prevention resources out there, and these are just a few that I personally use. So number one, Association of Certified Fraud Examiners, the ACFE, by far one of the best resources out there for all fraud prevention. They have publications, articles, reports, sample documents, a blog where other investigators around the world bounce questions off of each other. They conduct webinars and trainings. They have local chapters, and they hold national and worldwide events. And of course, you can pursue their certification. I have my CFE, and it was definitely worth pursuing. You can use that link here on the page, or you can Google ACFE. They're everywhere. The second resource, the Department of Justice, or the DOJ. What I'd say here is just to pay attention to the link that I added here in this slide. It's not the homepage of the DOJ, justice.gov/criminal-fraud. That link will take you to the DOJ space that provides up-to-date news and information on crimes, including fraud and money laundering indictments. I also recommend signing up for their alerts too. The OCC Newsroom Alerts, another great resource. Same with this link, it links to the details of crimes occurring in different financial institutions across the United States. I do want to note that if you do use that link, make sure that when you're on that page, on the left-hand side, you want to go into the search and filter box and under type, click alert, and then click apply filter. That's a lot to take in. I'll repeat that if anybody wants that information, or I'll have it added to the PDF we put out. But the OCC Newsroom, another great resource and good for signing up for their alerts as well. And you have the FBI, the scams and safety page of the FBI has great information that can be utilized to identify common fraud scams and schemes. Again, this is a specific link to that area of the FBI. So not an all-inclusive list. There are many more resources out there, but these are the ones I personally use the most. And I suggest you explore others out there and keep your fingers on the pulse of fraud, because new schemes are always popping up and old schemes will always try to make a comeback. So with that, I will kick it off to my partner in crime, Melissa.
Thanks, Patrick. Those are some good tips on the resources for fraud too. I know sometimes, I don't know why it is, but sometimes those websites can be a little difficult to find what you're looking for. So I definitely would agree with signing up for the alerts. That way you get the information. And I'll talk a little bit about that too, in terms of, it's really important when we talk about the differences of fraud and BSA. With fraud, you almost have to keep abreast of like what's happening in the fraud world, because I mean, with fraud, you've got to get ahead of it before you have that fraud hard dollar loss. So being involved and having those resources coming to you, so you can see the different type of criminal activity coming in or what's happening around your region is really key, because if you know that's happening, then you can go back to your fraud program and say, okay, how do we make sure we capture this type of activity? So what I want to talk about in the workflow for fraud, and when I talk about workflow for fraud, I'm more so talking at a high level with, you know, let's say for instance, whether you're working whatever type of software solution, you know, how you work that system each day should be somewhat the same. We're also going to kind of talk about too, you know, what's it going to look like if you look to kind of combine your BSA and your fraud department, cross those over. It does not mean when we talk about that we want those resources doing the same thing. Fraud and BSA are different, so we have to understand those differences. But let me talk about just these 3 points here that I have on this slide about prioritizing and working your fraud alerts. I think it's important that you identify and proceduralize what the day looks like for your fraud analyst or your team of fraud analysts. If you haven't done this already, one good exercise is to go into your software solution and just get a list of all the fraud alerts. I'm talking like get a list of what the names of the alerts are, but also a description of what the alerts are. What you're going to want to do is look for patterns to see if you're seeing overlap. Like, are you seeing similar alerts breaking for the same transaction type? That could kind of indicate that you may need to go in and modify those thresholds, or maybe just turn off one of those scenarios if you're seeing overlap. I want you to think about in this exercise too, ways to identify key fraud alerts that are more risky. So in order to do that, I want you to do another exercise. I want you to go back over the previous year, and I want you to start grabbing and pulling information of your previous fraud losses and also your preventions. Hopefully you're getting a lot more fraud preventions than you are losses. But I want you to grab that and just compile that in Excel or however you like to sort that best. Don't just grab dollar amounts, though. Grab information behind it. Grab like in your fraud system, like what alerts were triggered. Grab what type of transaction it was. Was it check kiting, check deposit, ACH fraud? Start gathering some of those just basic statistics. What I want you to take a look at is, as you start gathering that, do you see things funneling up to the top to where you can say, okay, we had, you know, 12 fraud losses. I'm just pulling a number out of the air. And what we noticed over all of these losses is we saw a trend with the same alerts triggering. So that's an indication that that particular alert for your institution at this point in time is a higher risk alert at your institution. So what I would suggest is to take that particular alert and proceduralize it to where you say our fraud analyst is going to go in each day and review this particular alert first. Most software solutions, you can do some type of filter to pull those out. In the same respect, if that particular transaction is breaking multiple alerts, you'll go ahead and review that then, but you're identifying where you typically see your losses or prevention so that you can tackle them first. Because remember, fraud is a hard dollar loss, so you want to get in and prevent that from happening. With respect to that, once you start kind of tackling your quote work list, Patrick mentioned a little bit about this too with the risk appetite, and I'm going to bring it up again because it's important. No institution wants to have a loss, right? But let's say, for instance, you know, you try and prevent every single loss, even down to $100. Well, if you prevented $100 today, did you have to go in and work 1,000 alerts to prevent that $100? Was that efficient in your time? Now, if you had to review 1,000 alerts or a large number, that's probably an indicator that you need to tweak some of your threshold settings too. So again, it just goes back to your overall procedure for how you're going to work things. So another thing you can look at too is it's possible to stop fraud at the front door. So try and stop it before it even comes into your alert monitoring system. And I know we can't do that for everything, but a couple of things that you can do, especially as we're talking about fraud and BSA coming together. One thing that you could do is you could take your customer due diligence, your CDD components, and you can build into your BSA questions things that would assist catching fraud before that risk even occurs at your institution. I'm not saying go in and add 40 new questions in the CDD, but is there one or two questions that one of your really skilled fraud professionals at your institution would say, I really think we could hone in on fraud at the front door if we ask maybe these one or two questions. So that's something you could do. With newer accounts, you could maybe do more transaction monitoring a little more heavily, but definitely leverage the customer onboarding process when we're talking about fraud. The departments crossing over or being combined does not mean that the workflow should be handled the same. So fraud and BSA, when we talk about workflow, there's clear differences there. The procedure, setup, review, and even threshold adjustment settings should be treated differently. Just because two groups tie into one another does not mean that you operationally run them the same. I'm going to give a quick example and then we'll move on to the next slide. But one quick example I want to give is, let's say, for instance, you have a loan officer in your branch that processes mortgage and auto loans. My question to you is the process that the loan officer takes to process the application and fund the loan the same? The answer is no. However, that loan officer is skilled in doing both, but there are different workflows for both because the risks are different. Your auto loans are kind of like fraud alerts. It's a quick and easy process. And flip side with mortgage loans, they're more like your BSA reviews. It's definitely not a quick and easy process. So here's my point. So let's bring it home. Let's go to my next slide, please. And of course, as we talk about bringing it home, I'm sorry, I have to give a goofy analogy. We're going to bring my point home all the way around to home plate, and I had to throw a little Braves World Series action in there. But so I think that financial institutions that leverage all of the BSA and fraud players together as a team bring home the trophy of a solid compliance program. So sorry, I guess they say corny dad jokes. I guess I do corny mom jokes. But anyways, so that's kind of my point there. Is just kind of bringing that point home about intertwining your BSA and your fraud players. All right, let's see. All right, next slide. Perfect. Okay, so I want to do a little story time here. I want to give a little story example of, we're going to start out with this transaction appearing in the fraud system, and then what happens in the fraud system. So let's talk about just a kind of a case example with a customer in a transaction. So I'm going to go through a few bullets here just so you can get a story picture in your mind. So let's say that we had a customer, they have a credit card account with a limit of $2,000 that has a zero balance. Only one person is listed on the credit card account. That customer comes in and makes a large check payment of $20,000 via the ATM. So this, of course, creates a credit balance of $20,000, which is highly unusual for a credit card account because normally you owe the bank money, not the other way around. Another thing we notice is the client is self-employed, working as a property developer, making around $200,000 annually. Now, here's the thing. This large check payment creates what? It triggers a fraud alert because, again, there is doubt that that check is actually good. The question is the money really there? And of course, the bank wants to protect itself against a fraudulent check. So the fraud department calls the customer just to find out what's going on. And the customer is like, you know, we're just going to be traveling overseas and we want to use the credit card to take cash advances, excuse me, because credit cards are not widely accepted here. And of course, the fraud department just thinks, oh, well, you know, that's reasonable. We're just going to wait for the check to clear, which it does in 5 days or so. Here's the thing, though. Here's kind of where the misstep happened when the fraud alert just cleared the transaction and closed the account. No further work was done by the fraud department. Was any work really necessary with the fraud department, though? Because there was no risk of fraud or loss to the bank. The fraud department stopped asking questions and they just closed the case. And I know I've talked about working fraud alerts quickly and fastly, but what if the fraud department would have said, I wonder where this money came from? How much of an extra time effort would that have cost? They don't have to go into an in-depth research mode, but they could have said, we feel like this needs to go into the BSA world. And had that fraud department been trained just a tiny bit more, they would have recognized that, yes, it's not fraud, we're not going to have a loss, but we do recognize a BSA risk. That's where leveraging the two departments kind of comes into play together. All right, so let's flip the switch a little bit. And I'm going to go on with my story mode. So unfortunately, during a routine internal audit, and this is when you never want things like this to happen, several months down the line, that alert was looked into further. So you never want internal audit or even examiners finding stuff that you don't. But they started digging deeper, and they noticed so many things over the past year. Some key indicators: there was a high velocity of transactions on the account. There were more than 75,000 attempted credit card transactions in the year, with about a quarter being approved. So really, if you do the math, it's not possible for one person to do all these transactions. And remember, at the top, I said only one person was listed on the credit card account. What ended up happening is they further saw multiple transactions on the same day using different channels, phone, web, in person, made from different locations, which again suggests more than one person is using the card. ATM withdrawals were attempted from foreign locations, a lot that were even higher risk for money laundering or terrorist financing. But here's my thing. The key is to understand money laundering risk. First, ideally, if you have good controls and settings in your fraud and BSA solutions, that alert more than likely would have initially hit the fraud system with the check depositing question being posed as a loss risk to the FI. However, if you have your BSA system to look for those anomalies, such as velocity, increasing transactions across different channels, ATM withdrawals at foreign locations, rest assured your BSA system would have captured this. But here's my thing: when you start tying in the departments, how much more of a reassurance would it have been to know that you have skilled fraud professionals that can also address BSA issues to escalate them and vice versa? And I'm not saying your fraud department has to go into a full research for a STAR, but they just have that knowledge to say this needs to go to BSA. That's when it's key to start leveraging the departments. Okay, so let's go to the next slide. I think we actually have a poll question coming up.
We do. Thank you, Melissa. I'll go ahead and launch our first poll question here. We're curious, for those that are in attendance today, as we're talking about this subject, does your BSA department cover fraud? And we do have 3 options. Yes, we do cover fraud in our BSA department. No, they are separate. Or you're unsure. And we'll give everyone a few seconds to take a look, and then we'll take a look at the results. Go ahead and close this out. Let's see what everyone said today. So, good portion, 62% said yes, their BSA department does cover fraud, and then about a third of our attendees said no. So this kind of, reaffirming what we are seeing kind of across the industry, more and more of these departments consolidating and working together. Thank you all for answering. We'll go ahead and head back into our presentation.
Yeah, and I'm not surprised at the result. What I will say though is, even though a majority of you all said yes, that the departments were combined, I'm curious to know too, is it because of things being constrained? I hope that's not the case, but I do think even if you are combining them, just know that I think there's there's always room for improvement, no matter what the situation is. So I think there's different things that you can do. So we'll pop to the next one, and we'll kind of talk about the crossing over when there's little to no crossover. And maybe even if you do have crossover, some of these things may not be applicable with you, and they may give you some good ideas. But I think it's important when you're crossing over that you address your BSA and fraud at the enterprise level. So it's like you have an umbrella and everything funnels under one umbrella. You have one stream that reports up to that, so you can kind of see everything holistically. I would ask the question, if you have an enterprise risk management program, how is that built into it? How does your risk assessment look? Whether your risk assessments are together or separate, is there a risk assessment for BSA and fraud that address both of those issues? I like thinking about analogies. That's kind of how my mind works. So if I look at a shoe, you have your shoestrings, right? You have your left side and your right side. Well, how do you tie your shoes? You have to bring your left and your right strings together to make a bow, right? So how do you cross tie? One key to enhance both together is really to bridge the gaps between siloed banking channels and business lines across the organization and within the BSA and fraud groups. With fraud and money laundering becoming more sophisticated, there will be more in-depth lines that cross into each other. I think it's important to have a system for fraud detection and BSA, again, talking about moving under one umbrella. And having all modules should be an end goal. If you are in the vendor selection process for a fraud system, I would encourage you to find systems that can leverage information together and build foundations of information to expand from BSA, which can tie into right into that holistic fraud approach. This approach can also funnel into an organization's processes, procedures, and systems just across numerous banking channels. They may not be compliance related, but rest assured they can pose threats as well. It can be really challenging for FIs to detect and link fraud or money laundering when you have different business lines that aren't directly connected. There's always going to be risks that aren't fully glued together, so tying in organizational, operational things is key. So again, just find those ways to bridge technologies within the institution. I think it's also important to identify where your diversification lies. What are those different business lines that are not crossing into each other? Are there different onboarding systems, core systems, loan systems? When different systems, procedures, policies, and training programs get separated across the different business lines, your risk emerge that can prevent connecting the dots between business lines. With fraud investigations, it's all about how to bridge those gaps. So again, together or separate, there's no right or wrong, but you have to keep communication. That's key for just a consideration. Cross-training is another big thing. Understanding what both parties do and look for. Training internal and external within the departments, and then outside the departments too is really a big key thing. And then I think I'm ready to go to the next slide. I think it's highly important too, just to understand the differences for the skill set. So let's go back to the fraud and BSA. Fraud, again, is your black and white, quick decisions on their own. Fraud is those hard dollar losses. So you got to move quickly through your alerts to make decisions. It's also important, though, even if you are a truly devoted fraud analyst, having that knowledge of BSA to where you can say, okay, this clearly isn't a fraud loss, but it could be money laundering, right? So we want to be able to escalate that and realize that could be occurring, so that we can send to BSA for further review. BSA is more analytical, thorough, decision, detailed. You got to trust your gut instinct. There's a lot of research and analysis that goes along with the BSA alert. With your BSA officers, they're already working with nearly every department at the institution. I mean, they touch branch staff, loan officers, mortgage departments, HR. That list just goes on and on. The same resources that are leveraged for BSA training to occur annually for all the staff, I mean, that should really be leveraged even more so when BSA and fraud are being brought together. There is definitely certainly a trend toward pairing BSA and AML monitoring with other areas of the bank, especially with fraud. It's definitely something that I think regulators are looking at. FinCEN has published a great deal of info on the relationship between fraud and money laundering. But here's some things. So I'm going to give you a few examples, you know, how to combine and build into one. I think one transaction monitoring system running both fraud and AML rules with generated alerts tagged for AML and those for fraud hits, I think that's really key if you have the ability to do that when you're combining into one. I think it's important too that there are links within your transaction monitoring system to provide 360 views of that total customer relationship, especially with fraud too, just to be able to quickly see everything in a 360 view, because again, you got to research and move quick. That just provides for faster, more efficient research. When you have that ability on the BSA side, it's really key, especially when you have to go file a SAR. A lot of times if all that 360 view is there, it's just going to pull that information in that SAR filing for you. Again, one case management system that kind of funnels into the transaction monitoring system. I think that's really key when we talk about leveraging fraud and BSA together, because it just allows for easier case escalation, cases between analysts and investigators. Think about splitting the group by skill set. I think it's important to identify the skill sets so that you can know where to train your gaps. You can identify team members within the group that I think definitely need to be abreast of creating policies, procedures. You need to have somebody that reviews all the regulation changes. And that you need to have somebody too that communicates and works with the different lines of businesses to, again, just continue to implement those programs. Don't forget about the need to designate the AML officer. You all know that. We all know too well that regulatory expectations of the AML officer are very high. At the end of the day, be cautious with merging. You always need to do checks and balances. And remember, you're not merging and combining groups to increase the workload among the staff, but rather task it as increasing collaboration. Take crossing over step by step. If combining is not the right decision, please know that that is okay. You can keep the groups separate, but I would formalize the relationship so that the two groups work together. And here's just a few examples for this, and we'll move on. But I would have the groups report to the same senior executive team member. It still would be great to have one common case management systems. If you do have separate transaction monitoring systems, that you could train fraud and AML staff what to look for with red flags for both departments. Again, specialized training for each department. You could even have the fraud group perform a self-assessment and report it to the AML officer. One other thing I'll mention too with this is if you have two separate groups, again, you always want to know, the left hand needs to know what the right hand's doing and vice versa. When we talk about SAR filings, I heard an institution in one of our previous webinars from experience to where a fraud SAR was filed and a BSA SAR was filed on the same transaction. And guess who caught that? They got a call from FinCEN. I think the regulator even got involved, but it was like the question was brought up, you know, you filed a fraud SAR, but you also filed a BSA SAR. It was on the exact same person. So they basically had the exact same transaction in person, but they had two SARs filed. So, you know, it is possible for things like that to happen. And one way to mitigate that is to have an operational process for reviewing the SARs. You know, have a SAR committee that reports up through the BSA and fraud department. I would ask the question how that's occurring. You know, is BSA just filing their SARs and being done, and fraud filing theirs separately? If the departments truly are separate. I think a SAR review committee before filing is really key. Okay, so I think we have one other poll question.
Yes, we do. Thank you, Melissa. I'll go ahead and launch this next poll question. We're curious what everyone's opinion on this is. Do you think fraud is connected to money laundering and terrorist financing? We have 3 options: yes, no, or unsure. And we'll give everyone a few moments to answer and take a look at these results. We appreciate everyone participating in these questions. Makes things a little more interactive and gives you all a chance to be heard during these presentations. Give just a few more seconds here. All right, let's go ahead and take a look at these results. So, overwhelming majority, 87% said yes, fraud is connected to money laundering and terrorist financing, followed by a few that were unsure and about 9% that were that said that no, they are not connected. Melissa, is this surprising to you?
And again, this is just my opinion, but I think totally yes, they are. I think yes, criminal activity related to fraud generates money that needs to be laundered. If you go back and look, fraud is a crime and is a predicate offense for money laundering. So I'm going to give you a Wikipedia definition because sometimes these terms it's nice to break them down, but in the criminal law of the U.S., a predicate crime or offense is a crime which is a component of a larger crime. So the larger crime may be racketeering, money laundering, financing of terrorism, etc. Crimes are predicate to a larger crime if they have a similar purpose to a larger crime. In turn, these crimes are the underlying source of the money laundering. Even though in many FIs there are separate departments that try to protect the FI from money laundering and fraud, unfortunately, in some of these cases, the fraud group and the AML group do not communicate or work together on the money laundering threats that face each department. And I mean, this answer, you could really kind of go either way, but I think when we're just, talking about the two in general, I think that criminal activity related to fraud tends to generate money that needs to be laundered for the most part. Okay, I want to give you a quick slide breakdown on something. And this is just something that's kind of a takeaway. We can push on to the next one. I know I've mentioned this overall in my ramblings as going through this. I appreciate you guys for hanging out with us. But again, I like to bring in some of the same points as we're closing out, but I think it's really important to understand the differences so that you can bind together if you are linking the two departments together. When work is similar in nature, but the overall work effort is different. So just an easy little graphical slide. When we talk about BSA departments, they work to comply with the regulatory requirements. On the fraud side, of course, they work to protect the organization from financial losses. The two main questions, they look similar, but they're very different. With BSA, you want to know, where did the money come from? You want to build that fraud trail to understand where the money came from. But with BSA, but with fraud, it's all about, is the money there? We see a check coming in, is this check good? But in the same respect, when you're merging the departments together, you kind of always have to link those questions together. So if fraud is looking at it from the respect and trying to decide, is this a hard dollar loss? If they say, no, it's not, it's going to be good, one additional question just to say, where did the money come from? That way they can just escalate it over to BSA if they need to. All right. And I think do we have one more poll question, Kristen? And then I think we can go into Q&A.
Yep, we do have one more poll question to wrap things up today. Should be popping up on everyone's screen right now. So before we dive into questions, we just want to give you all the opportunity to let us know here at Abrigo if you need any assistance with anything related to your BSA program. We know it can be overwhelming to manage everything on your own. So if you feel like you could use some help with your software solution, or perhaps a bit of extra support from our advisory experts like Melissa and Patrick on anything from a risk assessment to a policy procedures review, or even help with staffing relief, please let us know, and we'll be more than happy to assist anywhere that we can. Additionally, while we do have this poll question up, I will remind you all, you can ask any questions that you have for Melissa and Patrick inside the GoToWebinar control panel in the questions tab. That way we can respond to you either here live or follow up with you after the session if we don't get to your question. Give everyone just a couple more seconds to answer and we'll go ahead and dive into Q&A. All right, so we have had a few awesome questions come in during the presentation. The first one I thought was really great. What would go into a fraud risk assessment?
You want me to take that one, Melissa, or you got that one?
I think we could probably both give some good input on that one. I'll let you go first if you want to.
Okay, so when I did them in the past, how I would do it was I'd kind of split it up by type, probability, and then the potential impact. So, for example, one of the areas that I focused on prior would be like ID theft, check kiting, wire and loan fraud. And then what I'd do from there is I would look at the probability it would occur to the institution based off of prior events, had the institution had that occur in the past, and then the potential impact that had on the institution, and then assign a risk score to it accordingly.
I think those are some good tips too. I think it doesn't have to necessarily be completely different from your BSA risk assessment. You could almost take like the same template and just do it just a little bit differently. Just like you do in your BSA risk assessment where you look at all the different transaction types and you look at volume coming in. You can kind of do something similar with the fraud thing too. So like, for example, I think it's important just to look at your overall security. So let's say, for instance, wire transfer fraud. That occurs, unfortunately. But if you can put in your risk assessment, like the steps that your frontline is trained to go through, like how easy is it for money to go out the door with an an outgoing wire? Like, are there steps in place where you have like callback procedures and all that kind of stuff? That, of course, mitigates your risk. How well is your frontline staff trained, for example? To recognize like check deposit fraud. If you have a teller that's accepting a check, have they been trained efficiently to not just put recommended holds on checks, but to also recognize the need where that needs to be pushed up? So I think it's important to funnel that into your fraud risk assessment. I know we talked a little bit on it too, but I think it's important to not that you want to be able to show fraud losses, but I think it's also important to put in some type of chart with your fraud losses and preventions in your risk assessment, just so you can see trends from year to year, especially if you're doing more and adding more to your program. If you're seeing the losses decrease and the preventions increase, that's something that you want to be able to see trends in a risk assessment from year to year. So I think just putting statistical information in those is something to add into your overall risk assessment too. So that was a good question.
Excellent, thank you both. Another question we have come in, can you give a couple of sample question ideas to add to the application for account opening for fraud purposes?
Yeah, I think that's a really good question. One thing I was kind of thinking through that too is I think definitely you could ask questions, but I kind of got in my mind thinking too, I think it would be important too for your fraud analyst to have access to the CDD information, because that way they could see different things. Like, for example, if you have somebody open an account and they say their expected activity for ACH transactions is this, and then clearly when transactions start rolling through, it's not commensurate with what is occurring there. I think definitely there's BSA risk, but there's also fraud risk in there. A lot of times with CDD, we think, well, it's only the BSA officer that needs to look at that. And I mean, that's true because that's part of the regulatory requirement, but I also think it's key that those fraud people need to have access to that information from just statistical purposes and just being able to see fraud risk within that. You know, I think too, just from a fraud mindset, you know, just seeing things come in with an account opening, if they have just a particular job where maybe they only have a lower annual income for that particular job, yet they have X number of transactions that are coming in that well exceed that. That could be a BSA risk, but it also could be a fraud risk where they're trying to incur a loss at the institution. So it's not necessarily sample questions. I think that's a good option to do, but I would say before you even reinvent that wheel and start adding questions in the system, have your fraud analyst take a look at the questions that are there. It could be so different at each institution because institutions are different in terms of risk, especially if you know you bank a specific type of customer, whereas another bank may not. I think those are just different risks that you could look at too. So I feel like that answer was completely all over the board. Y'all feel free to jump in on the questions. I don't see to make no sense there.
Yeah, I think what I would just add to that is really when you're kind of reverse engineering fraud, look at what you missed at the front line too, and see what you could have asked at the front line to capture that in the middle of the process.
Excellent. That's great advice. Another question looking for a little bit of advice here. They said, we have a few BSA investigators who were previously on the fraud team. It has been a bit difficult for them to shift their perspective into BSA AML. Do you have any tips?
The first one I would do, because I've done both, I've worn both hats, is you sometimes have to deprogram. You don't unlearn what you already know, but you do have to sometimes deprogram and try and put that different hat on, because it's a different approach that you take for each one. Even though they're interrelated, the approach is a little bit different, and you don't want to approach them the same way. So that would be my advice, would be to kind of deprogram your thinking and to expand how you approach those two areas.
Right, and I think too with that, I think I love the idea about deprogramming, but I think cross-training too, because, you know, I think it's important when you have that shift happen, and I wore both hats too. So I did BSA monitoring and I did fraud monitoring. I did mine together, but I had it set up to where I would do my fraud monitoring in the morning, because again, it's hard dollar losses. So I'd spend a couple of hours each morning just doing the fraud reviews, and then I would just have to completely switch my mind to do BSA. But that's kind of how I did it from the get-go. So I think it's hard when you come from one background and have to add into another. But you know, one thing you could do, it sounds very simple in mind, is just think about that cross training. So what I would encourage is for the BSA and the fraud people, even though in that example the fraud person came over to BSA, the two groups still need to be working together. So it's important for that BSA person to understand that fraud person's perspective. If they do that, they can kind of shift their mindset and learn the fraud world a little bit. But at the same time, it's important for that fraud person to sit with that BSA person, watch their process, watch what they do. I think the best learning comes just from watching other people. And again, that's kind of hands-on cross-training. So I would encourage that if you have, like you said, a fraud person that's been doing fraud, they're heavily ingrained in fraud, and now you want them doing BSA, you've got to train them. And to me, the best way to train is that hands-on. So I think just that fraud person maybe sitting with the BSA person, watching them work alerts, going through that thought process. That helps a little bit with the deprogramming, but in a way, they're training each other. I mean, the end goal is for that fraud person to learn BSA, but I guarantee you that BSA person is going to learn fraud things just from that interactive cross-training. And that was the whole goal, really, of this whole webinar, is to talk about the collaboration. We don't want to combine the departments. We want them to collaborate together. That's how you make all of this work. Is it's not combining and saying like, well, whatever the BSA processes are, that's going to be what everybody does for BSA and fraud. No, we don't want you to change that. We want the groups to collaborate together, learn from each other. Oh, that was a good question.
Excellent. Thank you, Melissa. I think we have time for maybe one or two more questions. This one asks, how do you see consolidation of BSA and fraud departments working differently depending on the asset size of a financial institution? Do you think it could be difficult at smaller institutions with less resources?
I definitely think for sure. My experience came from working at a credit union, and I was a one-stop shop. So I did fraud in BSA. I worked at some of the larger credit unions. As you can probably tell, I'm from the South. I live in Alabama with my accent. But anyways, I worked for some of the larger credit unions in Alabama, and it was just me. I have heard, and I thought this was a great idea. I was on a panel several months ago with a bank that started leveraging their frontline staff to work fraud alerts. And I thought that was really interesting. What I heard from that, though, is don't be scared about what I'm saying. Tell everyone I work in fraud alerts. But when this whole COVID thing happened, we saw a complete shift in transactional activity, right? We saw cash dropping off, ACH picked up like we'd never seen before. And so for a lot of systems, the fraud alerts just increased drastically. If you have something like that happen, you really need to be looking at your program in general to maybe tweak some of the threshold settings. But one thing this bank did is they leveraged frontline staff to say, we feel like that we can take, maybe to start out small, some of the lower dollar alerts, maybe that are not as risky, and just allowing frontline staff access to maybe just work those alerts. I think that is like a really cool hands-on way to cross-train, not just interrelationally BSA and fraud departments, but also a way to cross-train just your organization as a whole. It's also a really good way to profile for like frontline staff that could be potentially good at doing BSA and fraud, because obviously you want to grow within your institution, right? Oftentimes it's very beneficial to hire within your institution and promote up. So I thought that was a really cool leverage that this particular bank did, was they started using their frontline staff to just work some of the fraud alerts. So that was another good question too.
Yeah, if I was just gonna, I was just gonna add to that too. The big banks are doing it really differently than the small banks. The small banks are integrating the departments, and the big banks are keeping them completely separate. So.
Yeah, I think that's another thing I'm seeing too. And I think I mentioned it in another slide, but whether you combine them or you don't combine them, again, it all funnels down to the collaboration. It's just intertwining them together in some way, shape, or form is going to be really key. And overall, just understanding the differences between the two. So, good points.
Absolutely. I think that's a great point to stop on for today. We are out of time, and so I'll go ahead and wrap things up. Thank you, Melissa and Patrick, for sharing your knowledge with us today. If anyone has any questions or would like to get in touch with Abrigo or today's presenters, please don't hesitate to send us an email or connect with us on our website. These slides, along with the continuing education certificate and other relevant resources, will be sent to you in a follow-up email for your convenience. I hope everyone has a great rest of their day, and we hope to see you all on future sessions. Thanks, everyone, for joining us.
Thanks, everybody.
Bye-bye.